Okay, here we are with some exercises for chapter 10, and this is about the sales chapter again. And so we're going to start with exercise 10.1. And then I'm doing the A version, the same ones that are in your textbook. I think you have the B version this time. So sometimes I have to switch it up in order to get one that has the right format. But this one, all this first one is doing is asking us to look at each document, what the name of each document, and see whether it would be for a retail business or a wholesale business. And so if you look back into your textbook, or if you look at the PowerPoint slides, they have these examples of the sales tickets and the sales invoices. And it's the sales ticket and the sales invoice look almost just alike, but the only difference is the sales ticket is normally the one you use when you're the retailer and you're selling to a customer. And so that's what they wanted you to say, whether it's retail for retail business or wholesale business, or both. And so the sales ticket is used in retail businesses. That's the ticket they give to the customer that includes the sales tax. And then the sales invoice is normally used just for the wholesaler to sell to the retailer. And so that's just a terminology thing. And it's not, it's when you're in your business, you're going to be just using the same one every day. If you go into a new job, you're not going to have to come up with it, know which one it is. You're just going to use the ticket they use, but they just like for you to differentiate between these two forms. And so you just have to learn it. What's the difference between a ticket and an invoice? One is just the term they use for the retailer to sell to their customer, which is the end customer, and then the invoice is just the report, the sales report that they do to record the wholesaler selling to a retailer. But anyway, credit approval is normally the wholesaler, because they're normally these in years past, a lot of retailers would actually check the credit and sell on credit, but that's not generally the way it works anymore. Usually the only ones that are selling on accounts receivable are the wholesalers that are selling to the retailers. But the ones that are selling to final customers, like when you go to Walmart or you go to Target, they don't ask you, do you want to put this on your account? They just want you to pay for it. And so that's a retailer selling to their customer. But a wholesaler, when they sell to Target or Walmart, they're going to normally put it on credit, and then the purchaser will pay for it at the beginning of the next month. And so a credit approval is usually not required for an accounts receivable account. In other words, if you just are selling to the final customer, because they are paying for it that day, either with their cash or with their credit card. And it's got its automatic approval built in if it's a credit card. But this credit approval we're talking about is where the company, that the wholesaler that's selling to a retail company is agreeing to sell on accounts receivable, to sell on account. And so they check the credit of the company and their reputation. Okay, so that's why that was wholesale. And then number 4, cash register tape summary would normally relate to that final sale, the retail business operations. And again, these days, using the computerized systems where they scan the UPC code, it automatically is going to come up with that same type of record at the end of the day, and at any moment during the day as well, because it's contemporaneous. They just keep track of it as it goes along, every transaction. And so, but in any case, that's normally the retail business that's keeping a tape that shows what's their sale for that day. And then the credit memos could be from both of them. The wholesaler or the retailer could issue a credit number to the customer, to their customer. And then customer purchase orders is normally talking about the wholesalers also, because normally individuals don't do a purchase order in order to buy something. So that's what they're looking for. They just want you to think about these different forms and which kind of company would use them. So that's not too bad. All right, then 3A, we'll try that one. This one's just a compute net sales. So what we're looking at is we have gross sales of 3860. We have sales returns and allowances of 410. We have sales discounts of 80. So this is a very straightforward problem, because the sales number is what you actually sold, and then the returns and allowances and the discounts are both contra revenue accounts. So they reduce the revenue. Gross sales is the revenue account. 3860, so it's like you had a little T account. So you could make a T account that would say sales. And on the credit side, you'd record that 3860. And then on the debit side, you'd record the returns and the sales discounts. And so you'd reduce the sales by both of those. So you wind up with 3860 minus 410 minus 80, which I think is going to be 3370. I looked on my paper because I already checked it out and reduced it. And so that 3370 is the net amount. So just as an aside, let me mention that that is the net they're talking about when the seller gives the terms. So on the day the payment is due, that when they say you can pay early and get a discount, or you can pay on time and everything's fine, that terms that says 210 net 30 is talking about 2% off if you pay within 10 days and the net by 30 days. So they're saying at least pay this total net that you owe by the 30 days. And if you're going to get a 2% discount or whatever percent they've offered, then you would base it on this net right here, the net sales times that percentage that the seller has offered you. Okay. Or just the net amount due at the end of the period that they've requested it. Okay. Number 4, this says, this is about sales returns and allowances. Is at the end of year 1, JC's estimates that 2,000 of the current year sales will be returned in year 2. Prepare the adjusting journal entry at the end of year 1 to record the estimated sales returns and allowances and the customer refunds payable for the 2,000. So this is very straightforward. They're estimating how much of their customers they think are going to bring stuff back that was faulty. And so a lot of things in accounting turn out being an estimate, where we estimate warranties, we estimate bad debt sometimes. This is just estimating returns that the customers would bring back. And so we're just going to make the journal entry by debiting returns and allowances, because of course sales is a credit account, but returns and allowance is a contra revenue account. So it's a debit balance account. And they said they expected to be $2,000. So for $2,000, we're going to credit the payable that we would have to pay if they come back. Customer refunds payable. That's what we want. We know it's a payable, but we're just trying to figure out if it's sales tax payable or customer refunds payable. So you know I like them to indent the account name too, and they didn't again this time. But I just want you to know, if you're doing it on a piece of paper, you would indent the credit amount and the credit name, both, right? So the credits entry is indented in every case, but except for when you're playing with Cengage and they don't cooperate. Anyway, that's that one. Now the next one, this one is exercise 10.9a. And so what they're wanting us to do with this one is make a schedule of accounts receivable. So all they're saying is this is our detailed subsidiary ledger of accounts receivable. We want to know if these numbers agree with the controlling account or the control account of accounts receivable. It could be called controlling account or control account, but it's the accounts receivable total. We're trying to see if the details in the customer's balances, when you add them all together, equal the accounts receivable balance that's in our general ledger. And so that's what we go to the subsidiary ledger that's called accounts receivable ledger, and we pull the ending balance of each of the accounts, and then we're going to tally them up, and we're going to check back to see does it match the accounts receivable in the ledger. If so, great. If not, we got trouble somewhere. Let's find it. Okay, so what we got is that, see, this accounts receivable ledger shows this customer B&G Distributors ending balance, $1,240. So we're going to take that right down to the schedule. Before I forget the number, I'm going to type it in. See, I already forget the name, B&G. Okay, we're going to record it just in the same order they listed. And then the next account after B&G, M Chang. Let's get their balance. They don't have a balance. We're going to put them on the list anyway? No. If they don't have a balance, just leave them off the list because there's no reason to list them if they don't owe us anymore. All right, so we're just going to skip you, M Chang. And then we're going to go to BJ Himschliff. That's tough. Okay, balance, $1,490. BJ Himschliff. $1,490. Still have to put the number first, so I won't forget it. Now, BJ Himschliff. Come on. Oh, Himschliff. It's not an M. Okay, that's not relevant. Okay, so that's where I was. The next one is Sally Pitts for 838. Sally Pitts. Okay. And the last one is Trendsetters for 1018. Trendsetters. Come here, Trendsetters. Need to see more. Can't see it. Okay, here we go. Here we go. Now, all I'm going to do, I pulled all the balances. Now I'm just going to add them all up and see if they come to the total, which this time they didn't give us. So I'm just going to do it with a check my work to see if it came to the right total. But when I added them all together, I got 4,586. So I'm going to check my work, see if it works. Yes, check marks. I love check marks. I forgot to check mark on the other two, but that's okay. I feel like they're pretty good. Let me just do it right quick. The other three. Check my work. Yes. And number 3, check my work. Yeah. Number 4. Okay. That's number 3. I've done all of them and I checked my work on all of them. Now, I have one more problem. This was the big one. It's not hard. It's just cumbersome because so many different places you have to put things, but not hard. So let's just do it. All right. So what we've got on this one is we're going to record in the general journal and then post to the general ledger and then post to the auxiliary ledger that's called subsidiary ledger, sorry, the accounts receivable balances of all these transactions. So first thing, they said, J.K. Bijan owns a retail business and made the following sales on account during the month of August of year 20, blah, blah. There's a 6% sales tax on all sales. So the first thing you need to know is every one of these has to have 6% calculated. So you could just go down this whole line and multiply each of these sales numbers times 6%, and you'll know how much to add for sales tax before you even start, or you can do each one individually. Okay, so the first thing that happens August 1st, we had sale number 213 to Jung Manufacturing for $1,200 plus sales tax. So we're going to debit accounts receivable, Jung, for the total. I don't have my total yet. We're going to credit the sale, which was $1,200. We're going to multiply 1,200 times 6% to get the sales tax, 72. We're going to record the sale at 1,200. We're going to record the sales tax payable at the 72. Now we can figure out how much to debit the account. Let me get this just a little wider so we can see it better. Okay. Good thing I did that because I had them in the debit column. 1,272. You have to put them in the right column, or else it's going to give you a big glitch when you start to do your final check work, right? Because that was going to be a nasty gram. Okay, so 1,200 plus 72 means the debit is for 1,272. And these post-reference numbers are talking about the account number for each one. And so we're going to go, we're going to look and see what the account numbers are down here. You see how they've got accounts receivable is 122, sales tax payable is 231. I'm scrolling down there to get the account numbers. 401 and 231. Okay, the accounts receivable number, let's see if we can find it. I'm sorry, I had the accounts receivable number, it's 122. And then the sales number is 401. See, I'm just looking at these account numbers that are on the general ledger accounts they provided. So every time, that's the account numbers I'm going to use. The next entry, same deal, same account numbers, because each of these is a sale that they're asking me for. See, every one of them are sales. So that's why I can safely go ahead and record every one of them the same way. It's going to be, of course, different amounts, and it's even different customers, but I'm putting them to the controlling account right now of accounts receivable rather than to that individual account. So I don't have to keep track of which customer's which. I'm just recording a lot of sales. In reality, if you were doing a manual recording of these sales, you would have them in a sales journal and you would just post the totals. But this time they told us to do each one of them individually. So we're being so obedient. Okay, so I got all the journal just because I didn't have to do them then. I could have done it with each entry. All right, so now what happened next? August 3rd, we made a sale to Assad for $3,600. So I got to enter my sales number first because that's the part I know best. I know I made a sale of $3,600. And then I know it was an accounts receivable to Assad, not accounts payable, right? I don't know how much it is yet because I didn't calculate my sales tax yet. So in order to get my sales, I know there's going to be a sales tax payable, but I got to figure out how much. So I'll take $3,600, multiply it times 6%, and I'm going to come up with 216. And then that number can be added to my sales to see how much is this customer actually going to owe me, because they owe for the sale and for the sales tax. So that's $3,816, isn't it? I'm just adding it together. All right, so that's transaction 2. That should be right. And then the third one is sale number 216 to Helsinki, $1,400. They're telling me I have to open a new account because there's not a subsidiary ledger account for that one yet. So that's just for future whenever I start to post them to the subsidiary ledger. I'm going to post them to the controlling account first. Then I'm going to go back and post those same transactions to the subsidiary ledgers. All right, so to the subsidiary ledger accounts. All right, so this is $1,400 and it's a sale, of course, for $1,400. I don't know how much yet the sales tax is, but I got to have sales tax payable as a credit, and I'm going to have accounts receivable to this Helsinki. Okay, so now to get the sales tax amount, I'm just going to multiply by 6% again. 1,400 times 6 is $84. So that puts my amount the customer is going to owe at $1,484. Right? Now, the next one, August 11th, a sale number 216 to Artist Myler for $1,280 plus sales tax. Sale is for $1,280. So I'm going to record the part I know best first. And and I'm also going to need a sales tax payable, and I'm also going to need a receivable for this Myler person. So now I can calculate my sales tax, $1,280 times 6%, and I get $76.80. With a decimal, please. The first one that hasn't been a whole dollar amount. So $76.80. I could have put zeros on all these. Now that they've given me $76.80, that makes me think I should have put zeros. We've already tested this, and they're going to give you credit. If they're whole dollars and you don't put the cents, it's still going to give you credit. But if you get to a point where you need cents, then you have to put the cents in to get credit. So the problem I have is I don't like for part of my entry to have cents and the other part not. So I have to go back and add it. So $1,280 plus $76.80 is a total of $1,356.80 for my collections. That's going to be collected, I should say, for my accounts receivable. And so for all of these, you could have put the decimals. It certainly would not count off if you put .00 after your $84. Still going to be right. Let me check more, just make sure they aren't going to scream about not having the zeros on some of them. Yep. See how if you didn't have any decimals, they don't count off if you don't put the decimals, because those were whole dollars, the first two transactions, no, 3. And then when we got to this one on August 11th, it had cents. So that's why I changed and started putting cents. You don't have to put cents if they don't require it, but it just makes it a little more aligned. If one of your entry pieces has, oh, it doesn't like this. No, look at this little X. Why'd you give me a nasty gram? You know why? Because my finger touched the wrong account. I knew I was looking for sales tax payable, but I touched sales discounts. So whenever I check my work, I can save myself a lot of trouble by fixing it at that point. So I'm not going to fix it now, even though I really am compulsive and I want to fix it. I'm not going to, because I know it's right now. I'm going to fix it next time I do check my work, and we'll see. August 11th was the last one we did. August 18th is a sale to Hassad for $43.30. So again, I need sales. $43.30, right? I should have go ahead and put the zeros. Probably. All right, and I'm going to have sales tax payable, and I'm going to have accounts receivable from Hassad. So 7330 times 6% gets me to sales tax of $259.80. And if I add that to my sales of 4330, that brings me to $45.89.80. Where you go? $45.89.80. Okay, that's good. All right, now on the 22nd, what happened? We made a sale to Jung for $2,000 plus sales tax. So let me get the 2,000 in there. Probably going to be even numbers this time, but now I'm scared to put even numbers. Okay, let's see. I need sales tax payable. I need an accounts receivable for Jung. My 6% of 2,000 is $120. And we wouldn't have had to put our decimals. So 2,120, but I'm keeping it in sync with the rest of the entry I was working on. It's all good. On the 30th, we made a sale to Artist Myler again for $16.10. $16.10. That's the sale amount. We need an accounts receivable for Myler. And we need a sales tax payable. $16.10 times 6% is going to bring us to $96.60. I just already did it. That's the reason I did it so quick. $96.60. So that means the total is $1706.60. Okay, now I've got all my entries in now. I'm going to do my check my work again and see if it's right. And so I'm looking for all of them to be check marks. And if they're not, I got to go back and correct it. Yes, thank you. So then I know those journal entries are correct. So then what I'm going to do is I'm going to post all those accounts receivable entries to the individual customers. And so I go to the first one and I've got Jung, and that was $12.72 is the amount of the accounts receivable we added to Jung. What's the account number? It's easier to find. Oh, I don't have the individual account numbers. I have to look for Jung's name. So go down to the accounts receivable ledger and I'll look in, they should be in alphabetical order. And so I go to his account. That's the control account. Let's see. I gotta find the detail accounts. Yeah, I was looking at the controlling account. I'm like, that's not right. Okay, so for Jung, $38.16 was the amount. And so his ending balance was $38.16 for that point. And that's August 3rd. That's when that happened. Nope, that's August. Oh, I did the wrong one. Jung, I'm wrong. August 1st was not the $38.16. It was $12.72. Sorry. $12.72. Okay. That's August 1st. And that's all I'm doing with that one. Then I'm going to the next day, August 3rd. Hassad is the $38.16. I'm going back down here, find Hassad and do $38.16. That's when I tried to do the first time. 16. And this is August 1st. August 3rd. Come on. Okay. Then the next one, I checked, I got this one. I got that one. Then I go Helsinki, 1484. $14.84. And this was Helsinki was August 7th. Okay, I'm just going down the line, the journal entries, and I'll just methodically, August 1st, August 3rd, August 7th, August 11th, I did Myler for $1356.80. Come here, Myler, $1356.80. And this was August 11th. Okay, now the next thing that happened, August 18th, Hassad, $45.89.80. 45.89.80 on August 18th. Okay, now I've already got a balance in Hassad of 38.16, but now he's got another order he owes me for of 45.89.80. So I have to add the two debits together. So the amount he owes now is 8,040, already added it, 580. And that's just the total of 38.16 and 45.89.40. These two debits together equal 84.05.80. Okay, so that was on the 18th. On the 22nd, we got Jung for 2,000. So we're just working in the subsidiary ledger now. Where's Jung? Oh, come on, HIJ. Okay, Jung was 2120. And again, we already made one entry to Jung. So he has a balance. He owes us a 1272. We're adding another balance of 2120. So he's going to owe us the total of both of them now, 33.92. Is that right? 33. Yep, that's good. And then one more transaction we have to post to the subsidiary ledger, Myler for 1706.60. 1706.60. This one happened on the last day, the 30th. So we already had a balance in Myler also of 1356.80. And now we're adding another debit of 1706.80, 1706.60. So that's going to combine together to equal 3,063.40. Okay, so all that's good. I think it's going to come out with a check. When I check my work, it's going to come out correct. We didn't put anything in the post references, so I'm going to see if they're mandating the post references. Check marks. All looking good so far. Yeah, it's all, everything's got a check mark, except we haven't actually posted to our general ledger, the journal entries, but we're going to. So I did the subsidiary posting first, and it all's good. The thing we could have done is the post references for the subsidiaries. So let me show you what they were looking for. They were looking for what journal page it was on. See this journal page 15 right here, shows right there. That's page J15. And that's what they wanted on these post references right here. Every one of them was on J15. So I'm just putting them in, even though it's not required. I just want you to know what goes there. And then all these journal entries for sales, accounts receivable, sales tax payable, and sales, all were journal 15 also, because they were all on that same page that we're dealing with. So, can't see that one. Scroll a little. I'm just putting them in, even though they're not required. They're not charging me any points if I don't have them, but I'm still putting them in just in case. So for all the entries that I'm about to post, they were all on the same journal page. So that's why I'm just going ahead and putting them in. Okay. We're going to post the journal entries that we made to these 3 accounts that were affected, and then we'll be done with this problem. Okay, so the thing we haven't done is we haven't posted the amounts and dates to the general ledger for these accounts. So the first one was a debit to accounts receivable of 1272, a credit to sales, and a credit to sales tax payable. This is August 1st entry. So August 1st, I'm just going to go to my schedule. And honestly, the thing to do would be just to snapshot the entries that you made and use that to scroll down and post to these accounts. Okay, so we have the first entry we have is 1272. And the ending balance after that is 1272. And then we had a credit to sales on August 1st for 1,200. If you look at your journal entries, this is exactly the thing we have in our journal entry. We're not changing it up. We're not trying to decide whether it's a debit or credit. We're just looking at our journal entry and posting what's there. And we had a credit to sales tax payable of $72 on that date. So our ending balance is $72. Then we go to the second entry, which is on, that was August 1st. I touched the wrong one right here. It's August 1st. And then this is August 3rd. The journal entry for August 3rd is a debit to accounts receivable for $38.16, credit to sales tax payable. And so this entry for August 3rd, we're about to do right now. We're going to post to accounts receivable for August 3rd, the $38.16. And that's going to leave us with an ending balance of $5088. Because if you have a debit in the account and you put another debit in, then your ending balance is just the combination of the two debits. So 1272, the debits right here, 1272 plus 3816 brings me to 5,088. Okay, and then my next thing, sales tax payable. Also, well, sorry, let's do this them in the order the entry is. The sales amount is $3,600. It's a credit. We're just posting it just like it is in the journal entry. So that puts us with 4,800 credits for sales because we're just totaling up the total of the credits. Or you can think of it as the ending balance. Last time was 1,200. I added another credit of 3,600. So that puts me with an ending balance of 4,800. Then the August 3rd on the sales tax payable, we post that $216, which brings us to an ending balance of 288, just a combination of what we already had in there and what we just added. Then we go to the next one, looking at your journal entries, you can follow this. We had a third entry on August 7th of a debit of $1484 to the accounts receivable, bringing us to a balance of $6572. August 7th, we had a credit. Well, let me do the sales first. August 7th, we had a credit for sales of $1,400, bringing us to an ending balance of $6,200. And then the sales tax for that day had been $84 to bring us to an ending balance of $372. And just that same way, we go through every transaction. I'm just going to post each one of them. And of course, if it has zeros and you want to put them, again, I skipped them on that one. So I'm just going to methodically go through and post these entries and pull an ending balance at the end afterwards. Don't go to evaluating and trying to figure out what happened again. Just post what you know happened because you have it in your journal entry, not because you have to think through it again. And then the sales tax for that day, August 18th. No, it's August 11th. 7680. $448. 80. So this takes a little time just because you have to chase everything down, but it's not hard. It's just a matter of posting what you have without even worrying about thinking about it. Just watch what you're doing. In other words, be careful as you transfer it over, but don't try to rethink the process of how do you record something. 12, the 18th, the sale was 4330, which would bring us to a 11,810. Okay, and sales tax payable for that day. Getting closer. $259.80. You have to go over here. Okay, now we got two more entries. On the 22nd, then what happened was $2,120. Bringing us to a total of $14,638. 60. Sales amount for that day. 2,000. 13,810. And the sales tax for that day, $1,220. 828.60. All right, and then the last transaction happened on the 30th. It was for $1706.80, which brought our total sales to $16,345.20. And our last sales transaction was for, let's see, $1610. Bringing our total for the sales for the period, $15,420. And our last thing, sales tax recorded on the last transaction, $96.60. This is just me transferring from the journal entry over to this subsidiary. I mean, over to this controlling accounts, the general ledger, basically. Okay, now assuming that I didn't key something in crazy or put the date in wrong or something, it's all gonna come out right. So let's go ahead and check my work one more time and hope for all the check marks. Just start from the top, see if you can see anything. It's not a check mark. See if you get any of those nasty red X's, and you see I got some. So I gotta go see what I got there. It's probably got a date reversal or something like that. Yeah. See that? I have August 11th twice, 18th and 22nd. Those are gonna be right when I fix them. Everything so far looking good. So that's not too bad. If the only thing I get is a check mark, an X mark on a date, and I can correct it, this is great. Oh, wait, 1706.60. See how I've got 80? I transferred it incorrectly. And so if I use that to add, I hadn't already added it up, it would also add this one, would also be wrong. But I've got it. So that's the only X I see. I'll just check it one more time. Looking for all green, no red. It's good. I submit. We're all good. So you guys are ready to do homework. And you have an Excel problem that's very similar to this one. Takes time, but it's not hard. And it helps you to get used to it and to be stronger and be able to do it. Okay? Take care.